Okay. Okay. U.S. building permits collapse in November. Multifamily plans plunge. This is counter. Well, it's not counter to what we read. We read that multifamily construction permits are at the highest rate since 1973. After the dismal homebuilder sentiment data earlier in the week, it's no surprise that analysts expecting a drop in both housing starts and building permits for November, and they were right. While housing starts fell 0.5% month over month, better than the 1.8% drop expected. As incentives dominated inventory liquidation, forward-looking building permits collapsed 11.2% month over month versus negative 2.1, the biggest month over month drop since the peak of the COVID lockdowns. That leaves the total number of housing starts at the lowest since June of 2020 for permits. Housing permits are down 22% year over year, the biggest drop since 2009, with single-family permits negative 29.7% year over year and multifamily down 10.7%. Under the hood, this is the ninth straight month of single-family housing unit permits declines. But more notably, multifamily permits plunged. On the starts side, single-family dropped for eighth month of the 9, while multifamily starts managed a small rise month over month. Single-family permits dropped 7.1%. From 841,000 to 781,000, the slowest since May of 2020. Multifamily permits tumbled from 17.9% from 620,000 to 509,000, the lowest since May of 2021. Single-family starts dropped 4.1% from 863,000 to 828,000, the lowest since May of 2020. Multifamily starts rose 4.8% from 557 to 584,000, the highest since April of 2022. Finally, circling back to the start of this note, we suspect building permits forward-looking face significantly more pressure as homebuilder expectations for future sales is at decade lows. That's the chart. That's not good. Let's talk about this in a few different ways. One, if you're a homebuilder and you think that the market is going to go down, you probably aren't going to be wanting to put in new permits for building. I'm just guessing. The other thing that I think builders are facing that is even worse is like they're not borrowing. Like if you can borrow at like 5 to 7%, they're not borrowing at 7%. They may be borrowing at this point in the 10s, 11%. I mean, they really don't want to be holding on to property for a long period of time or land. I mean, they're paying on that, and it's a good chunk of change. What will that do? Can we forecast what that will do in the future? Well, first of all, multifamily had been the beacon of hope for many in the house. They're saying just last month, well, housing starts are down, but at least we have multifamilies to prop things up and to keep going. Well, now what happens when both go down? It's not good. On the flip side, you could say, well, at least they're still building them. Then you could argue, well, they have to because they've got everything under contract. And if they don't build, they're going to die. They have no choice. I don't know how this is going to, quote unquote, break. I don't know which direction it's going to go. Can it break to the upside? I guess. But are we trying to break to the upside or are we trying to break to a not as horrible situation? I don't know. I mean, and that's the thing. All I can tell you is what I've learned in my life. I mean, that's happened to me personally is you buy a house and look at my house right now. I have no kitchen sink or dishwasher. I literally have to dig up my sewer in my basement. Okay. It's not fun, but you know what? Over the years, if you can stay in the house and keep it in shape, there should be, at the end of the day, you should get more in the selling price than what you bought it for. It doesn't mean more money. I mean, you may have put in a ton of money in your home. This is going to cost me a small fortune. Okay. So that should be added to any sort of proceeds that I get on a sale, but it won't be because oddly enough, and it's always been this way, just because you put money in a home doesn't mean that the market is going to give you that money back. And that's the argument for renting long-term. People would say, well, you rent because you don't get stuck with weird ass payments. My argument is you don't rent because you're at the mercy of someone else throwing you out if you lose your job, for the most part. And typically and historically, rents were higher than home payments. But I could see the argument to never buy a home. I'm a real estate agent. I'm not ashamed to admit that. This was from Schiff Gold, but it's more like from the people around Peter Schiff. I thought the headline was perfect. Everything is fine until it isn't. Yes. That's what I've experienced in my life. For months, Peter Schiff, me, and a few others have been saying the economy is teetering on the brink of collapse, but nothing has happened. Are we just wrong? I told my lender, Shelly, I said, Shelly, it seems like it's a slow moving train wreck. This can't continue like this. And she's like, I know, but it doesn't happen all in one time. So it's hard to see it. It could be easy to conclude that we're all crying wolf, but before you write us off, I think you should consider another factor. Predicting the exact timing of an event is much harder than generally recognizing that an event is on the horizon. Well, I'm of this belief that if you think you can actually think something into being. Behavioral economists, in the sense that, like when I was in Detroit and the automotive sector was getting hammered, people stopped buying things because they were afraid they weren't going to have jobs. They may have had jobs, but they were worried they weren't going to have a job. So that in turn brought down consumption. It's a little bit like forecasting weather. A meteorologist might know that a cold front is coming next week. She can see changes in the atmosphere, but knowing a cold front is looming and saying it will come through at precisely 10:30 a.m. on Wednesday are two different matters. That's exactly right. I don't know. I like to look at the weather apps. I like to look at the 10-day forecast and then laugh because they're not very accurate. I mean, you only get about 3 days to where they're somewhat accurate. Even then, it's a crapshoot. This is what I'm seeing. I don't know. Maybe you've got a better weather app than I. There's plenty of data out there suggesting that the U.S. economy is already in the midst of a downturn. There's also some tremors under the surface signaling the underlying rot in the economy. For instance, some analysts have already said the volatility in the bond market could force the Federal Reserve to abandon the balance sheet reduction, but there is still enough momentum in the economy to allow people to plausibly deny the problems. It says there's plenty of data out there suggesting the U.S. economy is already in the midst of a downturn. There's also some tremors under the surface signaling the underlying rot in the economy. For instance, some analysts have already said the volatility in the bond market could force the Federal Reserve to abandon balance sheet reduction, but there's still some momentum in the economy to allow people to plausibly deny the problems, or they willfully deny the problems. They don't see the problems that you see. They don't agree with you that the things you see are problems. There are people that say we're not in a recession. I think we're in a recession. Arguments about data aside, I said when the Fed cranked up interest rates another 50 basis points at its December meeting, my pessimism is rooted in more fundamental dynamics. In a nutshell, this economy is not built to operate in a high interest rate environment, and the Fed has now raised interest rates to the highest level since 2007. What I would ask you then is what economy is built to operate in a high interest rate environment? Quite simply, the U.S. economy is addicted to easy money. Yes, that's true. It's addicted to artificially low interest rates and quantitative easing. You can't take an addict's drug away without sending them into withdrawal. Well, I mean, this is the economy, and maybe you can get away with it. I'm just saying. I don't agree with that. I think that this is exactly what's going on. In the aftermath of 9/11 and the dot-com bubble bursting, the Fed dropped rates to 1% at the time, historically low level. That blew up the housing bubble. In 2004, the Fed began normalizing rates. They've peaked at 5.25% in 2006. That precipitated the housing bust and ultimately financial crisis of 2008. Now, look, this is key. These economists for Schiff believe that the Fed never fixed the inflation of the dot-com bubble. The Fed dropping rates to 1% at the historically low level Okay. They think that 9/11 was 2001. So they say that this is a continuation of the problem that has existed since then. That's their argument. I'm not interested in if it's correct or not. I'm just trying to put it out there so that you know where these people are coming from. It says today the Fed has pushed rates within 1% of that level. But there's a major difference between then and now. The bubbles are bigger. There is more debt. There's more malinvestment. If the extent of the bust is commensurate with the extent of the boom, then we're due for a doozy. Do you think that the bubble is bigger right now? Do you think that the economic bubble that we're in is bigger across the board? It's hard for me to say that because inflation is just eating away at everything. To be fair, Peter Schiff and I aren't the only people worried about a recession. There are a lot of people in the mainstream saying the Fed needs to stop raising rates or it's going to cause an economic downturn. The folks are only half right. It's not the rate hikes that will cause a recession. The Fed set that stage when it cut rates in the first place. Economist Daniel Lacal summed up perfectly. Sorry, my nose itches. In a recent Bloomberg article, a group of economists voiced their fears that the Federal Reserve's inflation fight may create an unnecessarily deep downturn. However, the Federal Reserve does not create a downturn due to rate hikes. It creates the foundations of a crisis by unnecessarily lowering rates to negative territory and aggressively increasing its balance sheet. It is the malinvestment and excessive risk-taking fueled by cheap money that led to a recession. See, it's not the rate hikes that will cause a recession. The Fed set that stage when it cut rates in the first place. When you understand these economic fundamentals, it becomes clear that the U.S. economy is heading toward a cliff. But I still can't tell you exactly when it will plunge over. A few days ago, now there have been, like for me, there have been moments where I thought, this is it. This is the thing. The crypto collapse. I really thought that was the moment that we were like, oh my God, here the economy is going to go off a cliff. When Amazon started laying off people, Facebook started laying off people, I thought, oh my God, the economy is going to go off a cliff. When Credit Suisse, I don't know, was rumored to be going under. When the UK had banking issues a couple months back, I thought we were in trouble. I thought those were the moments that we were going to see things eat it. A few days ago, I was revisiting the timeline before the 2008 financial crisis and the ensuing Great Recession, and I realized the dynamics were much the same in 2006 and 2007 as they are today. Now, look, we read Lawrence Yun come out yesterday and say, look, this is in no way like 2008. I mean, different economists say different things. Peter Schiff, Ron Paul, and a few others were warning of a housing bust and a financial crisis as the mainstream insisted everything was fine. In fact, up until the point Lehman Brothers went under in the fall of 2008, some people were still insisting everything was fine. I remember reading that a value stock to buy was a company called Bear Stearns. They'd been around for 100 years. Sure, they had negative earnings, but you know what? It's just a little blip. They're going to be fine. That's where you should be sticking your money. Bear Stearns, a value stock, quite the value stock as it went to zero. Of course, in retrospect, everything was far from fine as back as 2006. The Fed knew everything wasn't fine. That's why it started cutting interest rates in 2007, while still insisting everything was fine. My point here is that everything is fine until it isn't. The Fed has been slowly cranking down the amount of drug it's giving to the addict. The addict is already feeling the pain, but hoping against hope he will get a bigger fix soon. That's why markets react with glee every time we get bad economic news or good news on the inflation front. The addict thinks that means the Fed will go back to the status quo, pushing the drugs. But it's its December meeting. The Fed cranked down the drug level even lower. Jerome Powell keeps saying that the Fed can still manage a soft landing. But no matter what the pusher says, you can't take away an addict's drug without causing pain. And at some point, the addict is going to go into full-blown withdrawal. That's why I'm convinced that at some point in the relatively near future, something big will break. There will be another Lehman-type event that sets off a crash. Nobody can deny. But when that happens, I can't say. It could be the next week, next month, or even a year from now. Regardless, I believe The die has already been cast. It was cast the moment the Fed started running the printing press. The question is, what does the Fed do when this happens? How will it respond when it can no longer plausibly deny the economic chaos? Does it go back to giving the addict his drug, or does it let the addict die? It goes back to giving the addict his drug because it's political. The Fed is a political office. The Fed is controlled by the politicians. They will just go back to easy money policies and paper over it. It does that. They do that over and over and over again. Look at the spending bill that was just passed by both sides of Congress. I mean, just disgusting. Just disgusting. Or that will be passed if it hasn't passed already. If history is any indication, the Fed will go back to drugging up the economy. That means inflation wins. And if it doesn't, you can expect a financial crisis that will make 2008 look like good times. As Peter Schiff said in a recent tweet, a pivot will send inflation soaring, which will compound the problem. But if they don't pivot, we just don't get a severe recession. We get a worse financial crisis than the one we had in 2008. And that's what's going to happen. I do believe they're going to pivot. I do believe that we'll just see inflation continue to go up. And I don't think that they have any real control over it. I think we're already toast. Moving on. This is the last article of the night, and I just wanted to go over it in the sense, like, when you think of Wells Fargo, I bet you think that they're a wonderful corporation, that they would never do anything to hurt people. Well, it turns out they just were ordered to pay $3.7 billion for illegal activity, including unjust foreclosures and vehicle repossessions. What is my point? My point is this: as I've gone through this life as someone trying to run a business, I've had opportunities where I could take a shortcut, where maybe it would boost my growth in the short term and maybe long term down the road if I just compromise on my principles. If I just if I just go on credit, just go on credit. Don't go on cash. Just go on credit. It'll all work itself out, right? If I just commit a crime here or there, I'll do better off. I'll be better off. But that would make me no different than these massive corporations. And that's the difference. I mean, when you're working with someone like myself, we're trying to hold ourselves, we're trying to be accountable for our actions, and we're trying to represent you in a way that's the most professional you can be. That's not the case with these large corporations. Their business doesn't rely on your success. It relies on just a numbers game. How many empty, vapid souls can they get through their organization during their lifetime? I mean, it's bad. Here we go. What did they do? It says federal regulators fined Wells Fargo a record of $1.7 billion on Tuesday for widespread mismanagement over multiple years that harmed over 16 million consumer accounts. Now look, that harmed over 16 million. Now look at me. I don't have 16 million of anything. The Consumer Financial Protection Bureau said Wells Fargo's legal activity included repeatedly misapplying loan payments, wrongfully foreclosing on homes, illegally repossessing vehicles, incorrectly assessing fees and interest, and charging surprise overdraft fees. And now this is a company that you want to work with or work for? The CFPB ordered Wells Fargo to pay $1.7 billion civil penalty, in addition to more than $2 billion to compensate consumers for a range of illegal activities. CFPB officials say this is the largest penalty imposed by the agency. They're the second largest bank in the United States? This is child's play to them. The misconduct described by the CFPB echoes previously reported revelations that have emerged about Wells Fargo since 2016, when the bank's fake account scandal reached a national firestorm. It says Wells Fargo's recent repeat cycle of violating the law has harmed millions of American families. But see, to me, I mean, you don't have to. It doesn't even have to be a family. You can harm an individual, and it's still not right. Said Rohit Chopra, the CFPB's director, in a statement. Officials made it clear on Tuesday that Wells Fargo is not nearly out of the penalty box with regulators. I mean, come on. Chopra described Wells Fargo as a repeat offender and a corporate recidivist, adding that Tuesday's fine is just an initial step towards holding the bank accountable. During a call with reporters, Chopra said the new settlement should not be read as a signal that Wells Fargo has moved past its long-standing problems or that the CFPB's work is done here. It says, for instance, Chopra noted the settlement does not provide immunity for individuals at Wells Fargo, and the agency recognizes the $3.7 billion in fines and restitutions will not fix the bank's problems. Now, if you're telling me an organization can't be fixed with a $3.7 billion fine, like there's something wrong with that company. Although Chopra credited Wells Fargo with making some progress, he said it's not clear they are making rapid enough progress and said the agency is concerned that the bank's product launches, growth initiatives, and profit-boosting efforts have delayed needed reform. I don't agree with that. I don't believe that this regulator should be telling a bank how to run their business. I think the regulator should be regulating the bank in the sense of, hey, are you following the law or not? Are you getting advantages that other companies aren't? We needed to do something about that. Hinting at further penalties ahead, the CFPB officials said regulators must consider whether the additional limitations need to be placed on Wells Fargo beyond the unprecedented asset cap imposed in 2018. In a statement, Wells Fargo emphasized the broad-reaching settlement with the CFPB resolves multiple matters, most of which have been outstanding for several years. The bank said the required actions are already substantially complete. Well, so there's just a difference of opinion. So why did they settle? Why did they settle? Was there politics involved? Was there a slow news day? Our regulators have identified a series of unacceptable practices that we've been working systematically to change and provide customer remediation where warranted. This far-reaching agreement is an important milestone in our work to transform the operating practices at Wells Fargo and put these issues behind us. Wells Fargo expects the CFPB settlement will cost $3.5 billion before taxes in the fourth quarter. A fine of $3.5 billion and they're not even solved. It says systematic failures. According to the CFPB's enforcement action, Wells Fargo had systematic failures in its auto loan business that harmed more than 11 million accounts. Those failures caused Wells Fargo to wrongfully repossess some borrowers' vehicles, to improperly charge fees and interest, and to fail to refund certain fees, regulators say. Moreover, regulators say Wells Fargo probably denied thousands of mortgage loan modifications, causing some customers to lose their homes in wrongful foreclosures. I mean, this is terrible. By the way, this is an ad. 30-year fixed. Good luck getting a 30-year fixed at 5.75% on a 30-year fixed right now. It's an absolute joke. The fact that you're allowed to do this, to advertise numbers that aren't real, just is gross. Then we've got systematic failures. It says the bank was aware of the problems for years before it ultimately addressed the issue. Wells Fargo also illegally charged surprise overdraft fees and unlawfully froze more than 1 million consumer accounts, blocking consumers from accessing their funds for an average of at least 2 weeks. That is unacceptable. That is a serious issue in our country. This economic warfare that banks are allowed to, PayPal, what's that company? Patreon. These companies are able to hold your funds that you deposit or that you earn if you don't follow their social rules. It's very, very disgusting. And it's a shame that we've gotten to that. Billions in refunds to customers. It says the Wells Fargo scandal that began in 2016 drew a spotlight to Wells Fargo's treatment of employees and customers, triggering congressional hearings, countless regulatory probes, and the ouster of two of the bank's CEOs, and her finally act of chair of the Federal Reserve. Janet Yellen in February threw the book at Wells Fargo by imposing unprecedented penalties on the bank that remain in place today. Senator Warren on Tuesday applauded the new penalties on Wells Fargo and pushed for even more. Of course, Elizabeth Warren did. This is a much needed accountability after Wells Fargo repeatedly abused customers. The CFPB said the more than $2 billion in consumer refunds Wells Fargo has been ordered to pay includes more than $1.3 billion to consumers hurt by the bank's auto lending tactics, and more than $500 million for illegal surprise overdraft fees and misconduct related to deposit account. But look, once you lose your car, it's gone. Like, you give me $500 back when I needed to make a car payment. It doesn't do me any good. It doesn't make me whole. You freezing my bank account when I need to pay my bills, you giving me back like $200 for that, that doesn't solve my problem. Going forward, Wells Fargo has been ordered by the CFPB to make sure auto loan borrowers receive funds for certain add-on fees and to stop charging bank account holders surprise overdraft fees. Oh, great. It's like, hey, this is a law. Like, can you please follow it? They're like, okay. The agency said these fees are imposed when customers have available funds at the time of purchase, but then subsequently had a negative balance once the transaction settled. I want to know, it says right here, regulators fined Wells Fargo a record 1.7 billion on Tuesday. Where's that 1.7 billion of the total 2 billion, or of the total 3.7 billion? There's $1 billion floating around, $1.7 billion floating around that gets sent to the federal government? And if that's the case, I mean, who does the federal government give the $1 billion to? Non-governmental organizations? And of those non-organizations, which ones are dedicated to helping consumers and not some sort of left-wing or right-wing political machine? These are the questions you should probably be asking. They're the questions that I'm asking. Probably won't get an answer. This is not for me, right? It's not my problem. Okay. With that, I'm going to head on out. Hey, look. Hey, yes. Thank you. You're back. I can't believe that. Congratulations. Look at it. I mean, it's just kind of fun. So you can't even block them. Like, they'll still come back. Isn't that amazing? I think that's great. Well, what did we learn tonight? Well, we learned that I shouldn't text or try to conduct business on the phone when I'm doing a live stream. That was bad. Other than that, I hope you enjoyed the show. I'm going to head on out. Thank you for watching. Thank you for listening. I'll catch you on the next one, which will be tomorrow at 9 p.m. Central Time. Good night.